Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. We're seeing cataclysmic events take place in the European financial system, and because it's all one world system, they're having effects in the United States as well. And I've got Charles Biederman, runs a blog, very knowledgeable on these matters, and I've been watching his broadcast for months now, and we finally got him on the show. Charles, welcome to the Financial Survival Network.
Good to be with you today.
And we're really happy to have you. I'm glad we finally connected. I'm looking at a beautiful day out your window, looking at the water. I'm getting relaxed, and I'm thinking, hey, why am I worried? What's to worry about?
That's right.
Do we need to be worried and concerned?
Well, it depends. If you have financial interests in Europe and you own stocks and bonds and stuff, yeah, you have something to be worried about. If life is great and you have a lot of cash and you're happy and it's a great day.
But what if you're somewhere in the middle where you've got some assets, but you're not ready to retire and you need to invest sensibly, or maybe you need to convert to cash because in Europe right now, in Italy, there's a bank that's on a holiday, which means not that you get to go on a holiday from paying them the debts that you owe, but they go on a holiday from paying you your deposits or making loans to you that they promised to make. What do you do then?
Great question. We just started something called Biederman's Market Picks, which is a $10 a week newsletter, which I tell people what I recommend for a model portfolio. And since I've been selling institutional research for over 20 years and, to some of the biggest hedge funds in the world, it was my first time trying to provide a service to individuals. So that's a long answer to your short question. But basically in that model portfolio, 25% long gold. And I personally recommend 1 ounce gold bars, but, as long as you have a good market maker, 25% short, a basket of ETFs, including the Europe, emerging markets, and the big banks. Long go 25%, Apple, Salesforce.com, Amazon, my own fund, Trim Tabs Float Shrink ETF, which invests in 100 companies, shrinking the trading float the most while growing free cash flow. And also 25% long tips. The Vanguard 7-year average maturity is like 80%, and then 20% in 1-year tips, which is the TIP ETF. So to me, what I'm really saying with this is, one, everybody's printing money, and like the real answer to the world's problems is print enough money and you solve everything. And so therefore you got to have a lot of gold. On the other hand, that's like for deflation, and also the short side is for deflation. For inflation, which is also a likelihood, you can have inflation and deflation at the same time. That's why inflation protected securities. At some point, interest rates have to spike. And then the longs, we have a global expansion of online interconnectivity, and I want to buy companies that take advantage of that.
You're of the opinion that it could go more inflation and we could get deflation at the same time. In effect, we've got it now where we see basic commodities have gone up a lot, but if you want to buy a condo or a house in many places in the country, there's never been a time where the affordability index has been so favorable.
Yeah, well, the truth is we've never had a time when the central banks are running all the markets at the same time. I mean, there's like Japan started it back in '90, where it's just not okay for big banks to go bust. I mean, the big guys who run the big banks also are very connected to everything else, and we can't let those guys go broke. I mean, let's screw the whole country and save the big banks. And we did that in '08, '09. I mean, why did we save these guys? I have no idea. They should have gone broke back then. We'd probably be out of the recession by now. And Europe, I mean, Spain is, it is ludicrous. This 125 billion euro bailout plan. Spain itself, I estimated 300 billion in loan losses at the banks. UBS just recently, it said 325 billion euros. I was saying dollars. 325 is 400 billion in loan losses at the banks, and the whole country is $1.4 trillion. So the loan losses of 400 billion in a country with a $1.4 trillion economy. I mean, why would you want to fund that money? Let it go broke. Throw good money after bad. Not my money. You think Germany's going to give them their money to pay for the losses at the banks? Seriously?
Yeah, interesting times we're living in, and this concept of too big to fail really is not a concept that is compatible with long-term growth, with increasing living standards and limited government. It really amounts to a complete takeover by government of the financial markets like we see here in the U.S. There is no private mortgage equity market here. It's all backstopped by Uncle Sam. And that when the government starts guaranteeing stuff, you're going to have a really bad outcome. And too big to fail effectively means U.S. government. It's basically a branch office with a different logo and a different website, but it's the U.S. government that we're talking about for the entire financial system across the U.S., at least when it comes to credit, whether it's college loans, whatever it is, the government's in there causing mayhem, and something has to give.
I agree 100%. I would even take it one step further. To me, it's criminal fraud what people who run these governments are doing. They are lying. They are misstating the truth for their own benefit, for the benefit of the governing class, so that they can keep paying themselves these outrageous salaries with outrageous benefit packages, just to the government themselves. So to me, that's criminal fraud. They're lying, cheating, stealing for their own benefit. Yeah. And we look at it like, it's fairness. We need to keep, these government workers need to get these pensions that they were promised. Why?
It's interesting that you bring that up, because I wasn't going to discuss it with you, but, you're in the People's Republic of California. I'm in the People's Republic of New York. These people's, their pensions are basically, they are guaranteed by the state constitution that you can't decrease retirement benefits for a government worker. Somewhere, the Constitution is going to have a major head-on collision with reality, because we can't afford these guys getting six-figure pensions for 20-plus years of work and then free taxpayer-funded lifetime health insurance. New York is bust. California is bust. Illinois is bust. Wisconsin came back from the abyss. They actually did something that no one else would do. I want to see what other states are going to react.
Well, San Jose also did the same, where they did the cut pension benefit. Look, truth is, talking about criminal fraud, the employees' unions are the worst example. In New York City, there was a story in the Times that missed the real important stuff. They say the unions are objecting to the government reducing, or New York City reducing the estimated earnings from 8% on its pension to 7%, which if they did it from 8 to 7, that would increase the amount of money New York City would have to fund for pensions from $10 billion to like $12 billion out of a $70 billion budget. These numbers might be like $8 billion now to $10 billion.
The magnitude.
The reality is that the New York City pension fund is earning 2 to 3%. So if you mark to market, the amount of money that New York City should be putting into its pension fund to make it actuarially sound is over 20% of the total budget. And the unions refuse to allow them to state the reality that, hey guys, hey New York City taxpayers, you are screwed and we're screwing you. We're taking your money and we're not even going to tell you the truth about what's going on.
Oh, it's out of control. In the little town where I live, we've accepted that reality, and I actually got involved in politics, something I vowed never to do again. But the person we got in has said, can't afford to give part-time employees benefits, gone. People on the town council who were getting them, 20 grand a year for life, gone. And reducing headcount, contracting out. But, the unions, more than in Wisconsin, more than in probably any other state except yours, they own the state government. And there are laws in place, like, for instance, if you're a town and you can't reach a new contract with your union, the old contract stays in effect until there's a new contract. That's called the Triborough Amendment. And it makes it impossible to ever cut your costs because they just won't come with a new contract. Then you have to go to binding arbitration, takes years. The other thing that we have is this thing, prevailing wage. So even if you do find independent contractors to do stuff, you got to pay them the union rate. But at least I don't think you got to give them the benefits. But these guys are in for a major, major wake-up call. They aren't going to know what's going to hit them because the municipalities, counties, towns, etc., they can go bankrupt under Chapter 9, and they could just wipe these contracts out. And then the fight will be, can they just go back on the constitutional guarantees and just cut out all these services and stop paying them? That's an interesting question that's going to come before the bankruptcy court and eventually the Supreme Court. But this is going to be an amazing time to watch when they get their comeuppance.
Look, there's no question in the next few years, all these entitlement packages will be rewritten. It's going to be like the 100th monkey, where one or two, there's that big colony of monkeys and one or two find bananas and eat bananas. But meanwhile, everybody else is eating the same. And when 100 monkeys have discovered bananas, the next day, the whole tribe is eating bananas. So like you and me are like the pioneers in saying that we can't pay these entitlement packages and retirement and even Social Security. We can't do this. Medicare, we have to restructure. At some point, it's going to be like everybody says it and it happens. But until then, it's going to look like it's going to be impossible.
And that's exactly what you said about silver, too. Not to go too far afield, you said silver is a rotten investment. And then one day you're going to wake up when gold shoots to the moon. Silver is going to be the best investment out there. But of course, it'll be too late for most of us.
Yeah, well, but that's why I, even right now, on a supply and demand basis, I'm not as I reduced my outright holdings of gold and silver in a month or so ago. And the reason is supply and demand. The emerging world has been big buyers of gold bullion. And if growth in the emerging world is slowing, they're going to be buying less gold and silver. While long term, I still think, gold is going to be several $1,000s an ounce. But, it could be relatively weak as the world begins to realize how bad things really are in the emerging world, besides Europe.
Yeah, when you've got to sell the family silver to make ends meet, that means the supply of silver is going up no matter how you figure it.
Right, exactly. So for right now, I think being short Europe and the emerging market stocks is better play than speculating on precious metals. But long-term precious metals have to be a buy.
Yeah, there's a core position. And for me, I acquired it 4 years ago, put it away. It's hidden in various places around the world.
Will you tell us where so we can not do a treasure hunt?
You're going to have to get through my spring gun at the door. And and don't forget the Rottweilers, man. The Rottweilers are a more effective line of defense
one or
than
two?
anything. 3, and they've all been trained, to protect the jewels. But seriously, it's like you put it away and you forget about it. And if you can because you can't just opt out and say the crash is coming and I'm not going to worry about anything. You still have to participate, and you still have to continue on, because you don't know if and when it's going to happen. So it's really important that you keep diversified and you're investing in stuff that's going to hold value and protect you against a variety of different outcomes, because we don't know what's going to happen. The future, as that wise man, I think it was John Maynard Keynes, said, is always uncertain. Probably wasn't him, but I'm sure it's been said many times.
Yes, well, we know that there is a future.
Yeah. Yeah, exactly.
That we all know.
Yeah, that we do. So Charles, people want to find out more about you. Subscribe to your 10 picks, which sounds like a great
Biederman's
way.
Market Picks. You can go to our website, trimtabs.com blog, or do a Google search, Charles Biederman. Biederman's Market Picks. We just started. It's $10 for a 1 week shot, and when we have a half price sale for $260 for the year.
That's great.
And we also have 3 or 4 free videos each week on our site. And Danny Dorfman does a column for our site. So, we're trying to make it an attractive place to be.
Yeah, well, your videos are great. I try to always get them every week. In fact, we post at least once or twice a week. We post your work on financialsurvivalnetwork.com. You're no nonsense. You don't have an agenda, and that's what I like. Just the facts. That's what you need to be getting. You need the facts. Decide what you want to do. Whatever it is, doesn't matter, but get the truth. So at least then you have a chance.
Absolutely.
We're going to put you on the regular rotation, and we'll be in touch. You be well.
You too. And come visit if you want to spend a few hours in a nicer part of the world.
Anyways, hey, you be well, and thanks
All right,
again.
you too.
And great view. I love the view.
Care.
Hey, take it easy.